Hello everyone, welcome back to my channel. In this video we're going to be taking a look at Injective. I'm not a financial advisor. Make sure to do your own research before investing money into crypto. Taking a look at the CoinMarketCap page, the current market cap is at $1.3 billion, and this could be considered a mid-cap project, and the current price is right at $13. Nice round number. And what I like about the project the most is the circulating supply is sitting at 99.97% of the total supply. So there's a cap on the supply, and that means there isn't a lot of token dilution. You can get the token on any of the major exchanges without any issues. Now let's jump into the price action chart. As always, I'll try to keep this as brief as possible. Now back in 2022, we were entering Injective on Patreon sometime at, I think it was September, August 2022, so down this low, and we haven't been buying since. So we bought at this bottom and we were staking, and we got a good amount of staking rewards since November, or I think I started staking in December 2022, and then we had this massive run up. And we got to the 1.272, which was our minimal target at $42. Okay, and the fib that we have is from the bear market bottom in July 2022. And we have the all-time high, or the previous all-time high rather, from May 2021. So after we had this nice W shape here, this double bottom, we had a massive breakout. And we got all the way up to $42, like I said, and from there we saw a retracement to the golden ratio, to the 0.618, which is the most ideal, the most perfect area to bounce off of. And so far, so good. The chart looks really good in my opinion. And the fact that we held the 0.618 was very good. We didn't even dip towards the 0.5 that much. We just bounced off of $6.70, and we've done a 2x since then. So if you take a look at this move, it was around 120% from that local bottom in March 2025. Now, this does not mean that we cannot go back down and retest the golden ratio once again. As you can see, we are running into resistance here. The red block has been our resistance for quite a while. Back in 2021, we ran into it multiple times, and then we flipped it to support in 2023 and in 2024 multiple times. But then we dropped below it, and now we're back testing it as resistance. Chances are we're going to see a rejection from here, and the important thing at that point is going to be to hold this local low. Because if we don't do that, then we lose the golden ratio, potentially we drop to the 0.5, and we continue this downwards spiral and this downtrend. And we want to reverse this downtrend, okay? We've already come down quite significantly from the all-time high. That's an 87% correction. And we want to, of course, get to our 1.618 at $111. We'll see if that's possible by the end of the cycle. I think it should be possible. As you all know, the 1.618 is the technical target for your Fibonacci retracement after we break through the first fib level. Now, 750% to the upside, that's slightly more than an 8x, which would put us at around a $10 billion market cap or so. So it's not that bad at all, and it's very doable in my opinion. The only thing is we need Ethereum to start performing, to start breaking its all-time high prices. In that case, we have an alt season and we have a major run. And I do think that is still on the table here for crypto. It's just that the tariffs came out of nowhere and they really damaged the cycle, you could say, right? It's likely we're seeing an extended cycle here because of all of these delays. The other option is that some people believe we're already in a bear market and we're no longer going to be pumping, and we're just going to continue with these small retracements, but it's overall a downtrend with minor retracements to the upside until we get to a bottom. At the moment, I don't think that is the case. Bitcoin is still in a bull market. Bitcoin is looking healthy, and altcoins haven't had a massive rally yet, or at least the rallies that we're used to, and we're gonna see. Time will tell if we will have a rally like the one that we saw. And you can notice here on the weekly, the 20 weekly EMA is acting as resistance. So it was our support before. Now we dropped below it, the yellow moving average there. And now we're running into it as resistance. The important thing in this case for us is to break above it. Okay, we want to break past the 20 EMA there, and we want the 20 to flip and cross the 55 EMA. That will create this bullish cross, and that will be a massive indicator for you on the weekly chart. That will be a bullish indicator. We had a bearish cross over here, and that was January, February 2025. So that was kind of a looking glass for anyone who was potentially bearish, and this would have been a confirmation. And this was our bullish confirmation back in February 2023. As you can see, that was a bullish cross. So we're going to be waiting for that exact same signal this time around, and we'll have a rally from there. And I do think once we have another massive move to the upside, whether it is to $42, $63, or $111, I think there's going to be a powerful move to the upside, such as the one that we've seen. That will be the final leg of this bull market. And I could say the same thing for most altcoins. So be ready to take profits when we have another massive move, or let's say your current altcoin or Injective have some massive partnership announcement and then the price just does this. I would say in that case, you want to be taking profits, and you want to be either distributing that money into other altcoins, or you want to take that money, put it to the side, and wait until the bear market arrives. That's one scenario you could look at. Of course, none of this is financial advice. Another resistance you want to look out for, besides the red block here and the 20 EMA, is this over here. So as you can see above us, we had a descending channel, and we broke down from it, and now we're trying to get back into it here, but it's possible we're going to run into the resistance of the channel once again, and that should take us to somewhere around $25 roughly. That's going to be your potential exit if you want to be safe and just dollar cost average out of the project. You can sell a position here at around $26 to $28 around this descending resistance. If we take a look at the stochastic, at the moment the stochastic on the weekly is in the overbought, which is a bit odd, but seeing as we have seen a 2x move to the upside, it kind of makes sense that the stochastic is in the overbought. Now the stochastic is more of a short-term indicator, the stochastic relative strength index, and you can see here we have arrows pointing to the oversold zones, and that's the best time to be getting into your projects. And we highlighted this zone in March and in February, and hopefully you guys got in and you were able to make some profit. As for the relative strength index, as you can see, this is very low at the moment, and we're sitting at 47. Well, we're in the middle. You could say we're in the middle, smack dab in the middle of the RSI chart, and we have potentially, we're looking at a falling wedge here for the chart, and we'll see if we start a breakout from here or not. But it is possible if we have another correction in the market, we could drop and get back down to the support here, and maybe even go into the oversold below the index of 30. We've done that only once during the bear market a few years ago in 2022 in June precisely, and we entered a few months after that here in September. But this wasn't the bottom in terms of prices. I think the bottom was slightly after that. We can actually compare just to double check. No, actually that is accurate. The bottom was signaled very accurately with the RSI, with the stochastic, and then subsequently had the MACD bullish cross the next month after that. And we just had a bullish cross in May on the MACD, and the MACD is a confirmation indicator. So this indicator is essentially confirming the trend. And usually I like to use this on the bigger time frames. That's where it's most effective. Because if you go to the daily or to the 4-hourly, there's so many crosses and it just becomes a mess. So I like to use the weekly, and in this case we had a bearish cross in January, and now we have a bullish cross in May. The previous bullish cross was in September 2024 before we had that massive Trump rally. And this time around, we could have a rally throughout the summer like we did in 2017. We'll see if that happens. Usually summers are kind of bearish for crypto, but maybe this time it's going to be more of the 2017 alt season vibes throughout the summer in 2025. But let me know, what are your thoughts on Injective? The video is past 10 minutes. I didn't want to have it this long, but I just wanted to cover all the points and let you know what are my thoughts on the chart. I'm still holding, I'm still bullish on Injective, and of course if you want to know when I'm selling, make sure to join our Patreon. We have our exit strategies ready and set to go there. Stay safe and goodbye.